Markets got you down? Here are a few strategies that you can use to potentially help you during this down market. First of all, thank you so much for tuning in. This is Sid Misra, Certified Financial Planner. I appreciate you checking out my channel and watching this video. Before we begin, if you enjoyed the video and found it valuable, please give it a like, and also please subscribe so you don't miss out on any future videos. Thanks. So when markets are down, a lot of people have trouble figuring out what they can do in that situation. But there are some potential things that you can do to help your portfolio, which we're going to go over right now. The first thing that you can do is, and probably the most important, is to just reevaluate your situation. Are you invested the way that you want to be invested and towards your goals? Are you invested in a way that's going to get you towards those goals and to get you to the things that you want to accomplish? Take this time to figure that out. If there's too much volatility, maybe you want to reassess and take a look at your risk tolerance and see if you're invested based on that and based on what you can handle. Again, we want to make sure that our investments reflect the things that we are trying to accomplish and the things that we're trying to do in life. Number 2 is potential Roth conversions for your qualified accounts or your retirement money. If you have traditional IRAs, they're pre-tax. When you turn 59.5, that becomes 100% taxable. When you take that out, Roth conversions are a great way to make money taxable into non-taxable. So if you have a down market, this may be an opportunity for you to deploy this strategy and convert some of your portfolio, some of your qualified money, into Roth money, which again, after age 59.5 is going to be 100% tax-free. Now that tax-free money will be a game changer in retirement because that's going to change how you actually do income planning. If you don't have to account for taxes later on, that's going to be a huge help to you and your financial plan. Number 3 is for your non-retirement or non-qualified accounts. Tax loss harvesting is a strategy that not a lot of people know about, not a lot of people employ. And what that essentially is selling out of a position and locking in that loss, which then you can use to offset future gains. So locking in the loss offsets future gains, and if you don't have any sort of capital gains to offset, you can also write off up to $3,000 of income each year. Now, if you still have losses that have not been satisfied with the gains or offset with the gains, and you still have losses that are there after the $3,000 income that you were able to write off, you can carry that over into the next year. So you can see that tax loss harvesting for your non-qualified and non-retirement accounts is a great way to offset gains and lower some of your taxable income. Number 4 is to rebalance your accounts. A lot of times when investing happens and markets are moving in the natural way that they are, the allocations that you've set, your balance between equity and fixed income or stocks and bonds may shift and may change from what you originally set as the allocation. This may be a good opportunity to reassess and reevaluate and see, am I still allocated the way that I want to? And if not, how do I reposition myself to do that? And the last thing, number 5, that we can do to potentially help our portfolios in a down market is to do nothing. Sometimes the best course of action is just to see the carnage that's going on outside, to see everything that's going on, and just to say, I'm taking a step back, I'm doing nothing, there's nothing for me to do, and I don't need to do anything. Sometimes not doing anything is the best course of action for you. So we went over 5 ways that you can potentially take advantage of a down market and help your portfolio. The first one is to take a look again at your investments and make sure they align with your goals, your time frame, your risk tolerance, and adjust if need be. Number 2, for your qualified money, your retirement money, see if there's an opportunity for a Roth conversion to shift over from 100% taxable to Roth, which after age 59.5 will be 100% tax-free. Number 3 is to do tax loss harvesting for your non-retirement and non-qualified money. This will allow you to lock in losses, which can offset gains and also reduce your taxable income for the year. And any remaining losses that you don't use can be carried over to the next year. Number 4 is to reevaluate your allocation and rebalance if necessary, right? Make sure that you're still within the equity, fixed income, or stock versus bond mix that you set for yourself. And if not, rebalance to get to that allocation that you want to get to. And number 5, and maybe the most important, is to do nothing, right? Sometimes doing nothing is the best course of action. We don't need to be active every time the market makes a move. Sometimes we just need to, turn off the computer, not look at the account, and shut off our brain, take a step back and do nothing. Again, thank you so much for tuning into this video. 5 potential ways that you may be able to help your portfolio in a down market. Again, Sid Misra, Certified Financial Planner. Thank you so much for tuning into my channel. Give this video a like if you found it valuable and you enjoyed it, and please subscribe so you don't miss out on any future videos. Thanks a lot and take care.